We want to continue our discussion now with our ag economist, Larry Sanders. And Larry, let's talk about the drop in oil prices we've seen the last couple of months and what it's meant for Oklahoma. What's the overall picture?
Sure, it's been a remarkable story. We've had oil prices over $100 a barrel just a few months ago, and just recently we went below $50 a barrel. That has to be a major change for key players in the chain of oil and gas. Just real quickly, what seems to have caused it is overproduction. We've got too much in the market, and that's just because we've gotten very successful at finding it and getting it out of the ground, oil and natural gas, and not just here in the United States, but around the world. And Saudi Arabia has decided that they're going to see how many people they can drive out of the market now, and they can afford to do that. So we're gonna watch prices wallow around at this price, maybe even go a little bit lower for a while before they start ticking up again.
How long do you think this trend is going to last, and when do you think we might see a bit of a recovery?
Well, again, I think Saudi Arabia is the key. It only costs them $4 or $5 a barrel to get oil out of the ground, and that's probably the cheapest cost of production in the world, and they've got a large stockpile of it. And so they have been very concerned, selfishly for them, over the last year or two to see Russia come into the market, and Russia's a relatively high-cost producer, and so they think they can push them out of the market fairly soon. The United States, we've been so successful with hydraulic fracturing, and in Oklahoma, one of the leaders in that. It's been a remarkable story of finding a way to get that stuff out of the ground, but it's brought millions and millions of barrels of oil onto the market. And Saudi Arabia would be tickled to death if they could drive the price down enough that it drives some of our independents out of business and shuts some of those down for a while, so that we can begin to see a reduction in the excess supply, and then they would start it. So we're probably going to see it for at least 3 to 6 months, low prices. If that drives some of those people out of the market, if demand starts coming back a little stronger, then maybe toward the end of the year we'll see prices start coming up again. But Saudi Arabia is prepared to wait it out. So
some strategy there for sure. In terms of the impact on Oklahoma, especially agriculture, what's your take?
Well, you know, agriculture, oil and gas is a two-edged sword for agriculture. They are consumers, of course, so, you know, oil and gas are inputs into the production process. More for cotton producers, perhaps, and maybe a little less for wheat and corn producers, depending on where you mark the boundaries of it. But as far as their production processes, I don't think very many of them are going to go run out and buy new combines because of the lower price of fuel. If it stays for a year or so this way, then they may begin to think about things like that. Fertilizer, they may bank a little more fertilizer in case they think they need it later in the season. It's going to be easy for them to fill the tank up and make a few more sweeps over the field if they think they need to. So we may not see as much minimum tillage this year as we have in previous years. So it'll be a very mixed story for farmers and ranchers.
Well, Larry, we certainly appreciate your time and perspective, and keep us posted on all of these new developments throughout the year.
For sure.
Okay, thank you, Larry.